Hi there, welcome back to Market Fatafat. Time now to keep going with all the buzzers in today's trade. Let's talk about Yes Bank. That's a stock that's in focus today. Earlier in the day, we had source-based reports telling us that RBI is likely to give an in-principle approval to Sumitomo Mitsui to acquire stake in Yes Bank, and Japan's SBMC may initially acquire less than 26% stake and then take it up all the way to 51%. On this, we now have a Yes Bank clarification that was issued. Remember, at one point of the day, Yes Bank was as high as 10%. Now that has receded. Nonetheless, a 2% uptick coming in once again after we had the clarification that came in from Yes Bank, wherein they've said that Japan's SBMC's talk with SBI for Yes Bank stake buy is a routine. It's just a routine development. They are exploring opportunities aimed at enhancing shareholder value. Such discussions are preliminary. They do not warrant a disclosure as of now. Information is speculative at the point and not factually correct, is the clarification that Yes Bank has issued for now. So at one point when the stock was up as much as 10%, it's receded. But once again, on the back of this clarification, the stock is up 2%. So looking good for Yes Bank in today's trade. But if there's one stock that is up and away and holding on to those levels today, Rabinder, is CCL Products on the back of its quarter four earnings. Tell us what the numbers look like, because the stock is in action today.
Well, as CCL product deliver a strong performance in Q4 with revenue rising to 15% year-on-year basis at rupees 836 crore from 727 crore year-on-year basis, and net profit saw a robust 56.2% uptick year-on-year basis at rupees 102 crore, while EBITDA increased by 38.2% to 163 crore. And if we talk about EBITDA margins, then the EBITDA margins also improved notably by more than 300 basis point year-on-year basis at 19.5% as compared to 16.3% year-on-year basis. So back of the strong Q4 result, stock is up over 12 to 13%.
That's the reason why CCL Products in focus. Good set of quarter four numbers coming in. Stock holding firmly with a 13% gain ever since the opening bell today. But Gaurav, coming to you, Coforge is the stock that you've picked out for us, also in focus on the back of its earnings. Tell us what the earnings are and what brokerages are making of it.
Well, yes, yesterday we saw Coforge came up with good set of numbers. In fact, strong set of numbers is what we saw from the company. In fact, in the morning also, when we look at the stock movement, we saw the Coforge stock price was as high as 7% in the opening trade. But after that, we are seeing some kind of consolidation. When we look at the results, those were actually great. In fact, when we look at the brokerages, their take is also a little bullish on Coforge. We have got Motilal Oswal, who maintained their buy rating and a target price of 11,000 rupees on the stock. What they're saying is that the beat in revenue and margin was what we saw in this quarter, and from here on, they believe that the execution order is going to be very strong for Coforge in FY26 as well. Nuvama, on the other hand, actually decreased their target price to 9,400 rupees. What they believe is that the company has actually built a solid foundation for FY26. Coforge reported a super strong TCV number, which actually is up more than 174%, which can actually reaffirm their stance on the leadership in the sector. But at the same time, they have tweaked their FY26 estimates almost by 2.6% downwards. On the other hand, we also have Jefferies, who maintained its target price at around 9,000 rupees on Coforge with the same view. But when we look at the stock performance, it seems that there is some profit booking, because after 7% gain that we saw in the morning, the Coforge is now currently under pressure. So definitely watching on this stock.
Okay, well, time now to welcome our techie for this segment on the show. We have Akshay Bhagwat, who's joining us. Akshay, welcome to the show and good afternoon. First stock you've picked out for us is Infosys. Now, we've seen mixed earnings coming in from the IT pack, at least on the fundamental front. Technically, tell us how is Infosys placed compared to its peers, and what kind of levels are you spotting for this one?
First of all, good afternoon. So yes, the IT pack is the sector one should be looking for, because in the current situation we are in, I think this is the sector which has good pockets of safety, and I believe that the recovery which we have seen lately in most of the IT names is there to continue for the next few trading sessions. So here, if you're talking of Infosys, we had a recovery rally post the results. The volumes have been pretty encouraging, just that there has been a lull in terms of trading action since the last 6 to 7 trading sessions. But the overall technical setup makes me believe that the stock is heading for levels of 1600 plus within a month's time frame. Support zone 1450, so maintaining a positive view on Infosys.
A positive view on Infosys. Let's talk about a stock that's in focus. Was in focus yesterday on the back of very strong earnings, and today once again in focus on the back of brokerage bullishness coming in, and that's M&M. The stock was up almost 3% at one point in the day, is up 1.5% as we speak. Let's take a look at what brokerages have made of its quarter four numbers. First of all, Jefferies has maintained their buy rating. On the flip side, they've cut the target price to 4,000 from 4,075 rupees earlier. They expect 12% volume and 18% core EPS CAGR over FY25 to 28. They see 18% core EPS CAGR over the same period as well. Moving away from Jefferies, let's talk about Kotak Institutional Equities. They've maintained a buy rating and target also steady at 3,500 rupees per share. They expect the company to continue outperforming industry growth, and tractor segment is expected to continue its uptrend as well. Lastly, let's also take a look at what Bank of America is making on M&M's numbers. They've maintained a buy rating. On the flip side, they've hiked the target price to 3,700 from 3,385 earlier, compared to Jefferies that has maintained its rating but cut the target price. So mixed news coming in, but the overall outlook remains bullish on the stock, and that's the reason why the stock is up 1.5%. But let's also go across and listen into the management, because Dr. Anish Shah, the Group Chief Executive Officer and Managing Director of the Mahindra Group, shared with us the rationale behind the SML Isuzu acquisition and the path to scalability going ahead. Let's go across and listen into a snippet of that chat.
So we are hungry for scale.
Okay.
You're right. We started with consolidation. We pivoted to growth after that.
Yes.
And that's the phase where we drove growth across our businesses. Our organic growth across the group for the last 5 years has been 25% per year. And we feel that organic is a really good way to grow. You don't need to go and acquire something difficult to do, but sustainable. And now we're looking at scale. And for scale, it is continuing organic. It's continuing the use of technology in a number of things we do. It is making targeted acquisitions. SML is a very targeted acquisition. It's one that fits our business very well, allows us to grow the business, because we've got a very stringent set of criteria for acquisitions, and that has to deliver returns that are above what the industry would deliver or the market would deliver. And therefore, we will keep a high bar for it. And our approach, therefore, is scale from organic technology, from acquisitions.
Okay, well, let's move on from one auto major to the other. From M&M to Maruti now. Akshay, you've picked out Maruti Suzuki for us on the charts. Last 6 months, the stock is up 11% looking good on that front. Last 1 year, however, the stock has been absolutely flat, but last 1 month, again a 10% move coming in. Do you believe that the momentum that the stock has gained is here to stay now?
So absolutely, if you look at the price structure, this stock had a positive technical breach or a breakout above the levels of 12,000. We saw this happening last week, and that's a very positive development in the stock from a short-term trading perspective. Volumes have been pretty strong. I believe the numbers to post the result reaction has been good for Maruti, and the technical setup is hinting for the stock again to be revisiting the levels of around 13,500, which has been tested twice in the last couple of months. So technically positive, momentum is strong. 13,400, 13,500 is where Maruti should be heading for, and 12,000 is an important support zone. So maintaining a positive view with targets of 13,400 in Maruti.
Okay, so that's the levels to watch out for when it comes to Maruti. Ravinder, coming to you, Bombay Dyeing is the stock that you've picked out for us. Give us a sense of what the earnings for quarter four have been like.
Well, yes, Bombay Dyeing is in focus. Our company has announced its Q4 number, and the company reported a weak set of number for the quarter, and revenue from the operation declined to 5.5% year-on-year basis at rupees 359 crore from 381 crore, and net profit also declined sharply by approx 83% year-on-year basis at rupees to 11.53 crore compared to 66.54 crore. The company reported a EBITDA as a loss of 12.85 crore, though it narrowed from loss of 43.86 crore in the same quarter last year. And the other income also declined by other income also declined by 48.6% year-on-year basis to coming to rupees 36 crore. So back of the weak Q4 number, stock is up over 5.5%.
So the weak set of numbers coming in from Bombay Dyeing, that stock taking a cut in today's trading session. Akshay, coming to you for HCL Tech, we spoke about Infosys just a while ago. Give us a sense on how you are seeing HCL Tech also placed on the charts, and what are the next levels to watch out for?
So as I mentioned in my prior commentary that I am pretty bullish on the IT space. So the second stock which has a strong technical setup is HCL Tech. So if you look at the result day price action, this was 7-8 trading sessions back. It reacted very strongly with massive volume surge and a gap up open to start the day on the day when the results were announced. Post that, there has again been a kind of a sideways consolidation for the last 7-8 sessions, but that does not take away the broader strength which I see technically in this script. So 1700 possibly is the target area where HCL Tech may head for. There is a strong support base which is building around the levels of 1500. So maintaining a stop loss below 1500, one can look for targets of 1700 in HCL Tech.
Okay, so that's the levels to watch out for on HCL Tech. Gaurav, let's come to you for CDSL, also an earnings candidate. Tell us what the earnings fine print is.
Well, yes, when we look at CDSL and when we look at the numbers, actually weak set of number is what we saw. Revenue declined almost by 19% on a sequential basis, mainly due to the overall volume and retail participation which was lower, and also because of the fewer demat accounts that open in this quarter. Other than that, higher technology and other expenses also dragged the EBIT margins down as low as 1500 basis points to around 42.4%, which also brought down the EBIT almost by 32% on a year-on-year basis. On the other hand, when we look at adjusted PAT, there also we saw a decline of around 22.9% on a sequential basis, and this was again because of the lower participation. When we look at the commentary as well, we are seeing some kind of negative or rather a very pessimistic commentary coming up. What brokerages are saying is that the lackluster in secondary market is actually something which is likely to stay, and that is going to put some pressure in the stock price. On the other hand, what they are saying is that the impact of lower IPO numbers will also impact in FY26, and that is the reason what we are seeing is that some weakness in the stock price. The stock is down almost 3%, so definitely watching out on this stock on the back of the weak set of numbers as well as weak outlook for FY26.
Okay, so that's the reason CDSL is in focus on the back of its weak earnings. The stock is taking a dip today. Akshay, we'll come to you. Bajaj Finance is the stock that you've picked out for us. I see you're playing it safe with all these large cap names. Tell us what's the outlook going ahead from Bajaj Finance as well, because last 6 months itself the stock is up 26%. So what are the key levels to watch out for?
Yep. So absolutely the kind of the market conditions we are in, it makes a lot of sense to be with the strong names. And I believe if you see the Bajaj Finance, the reaction post results was a bit on the negative side, but the bonus announcement and the stock split which is announced, although the ex-date is not known, is a very positive sector, and this will always cushion any kind of small corrections you will see in the stock. So technically we have a strong price structure. 8400 to 8500 is the broader support zone, and the way this stock is setting up again, levels of 9400 9500 can be in the making. So maintaining a positive view from a short-term trading perspective. Stop losses below 8400 for targets of 9400 is the setup for Bajaj Finance.
9400 on the upside is what Akshay is spotting for Bajaj Finance. On that note, viewers, we'll step into a short break on this edition of Market Fatafat, and we'll be once again joined by researchers and guests on the other side to take you through some more buzzers. So you stay tuned and we'll be right back. Hi there, welcome back to Market Fatafat. Let's keep it going with all the big buzzers in today's trade. Let's talk about Glenmark Pharma because like Ravinder mentioned, the entire pharma pack is in focus on the back of Donald Trump asking the US FDA to charge more for investigations and also to amp it up. But having said that, the entire pharma pack is reeling on the negative side. But Glenmark Pharma by itself is also in focus because the company has said that its innovation arm, which is ICNO's Glenmark Innovation, has announced that the US FDA has granted fast-track designation to its ISB 2000 drug, which is its investigational therapy for multiple myeloma. The FDA's fast-track designation is designed to enable the development and expedite the review of drugs that treat serious conditions and address unmet medical needs, with the ultimate goal of getting important new drugs to patients earlier. So this is a drug that's in focus and has been in development for quite some time for cancer that is recurring and keeps coming back. So that's the form of adult myeloma, and Glenmark Pharma has got the US FDA approval to fast track this drug now. It is a positive news flow coming in for the company, but because of everything that's been happening in the overall sector, the stock is lower in trade on the flip side, in the negative, but nonetheless, it's only a 1/10 1.5% cut coming in on Glenmark Pharma. That's why the stock is in focus today. Let's move away from that. In Akshay, Max Financial is the stock that you've picked out. A stock that we don't usually discuss when it comes to talking about stocks on Market Fatafat. Tell us, why have you picked out this stock? What's standing out to you about this one? What are you spotting on the charts?
So technically, this is more of a double top formation, which we call, because if you recall, somewhere way back in October 2024, 1300 levels, post testing these levels, we had a sharp correction in the stock, which saw the stock going all the way till 1000 in the next 2 to 3 months. So the resistance is pretty massive. We are noting selling intent again since in the last couple of days from the levels of 1300, and that just signals that possibly you may have another round of short-term correction in Max Financial, which can see downside targets opening up for 1200. So this is more of a trading short-term call where we are looking at downside targets till 1200 with strict stop losses above 1325.
Max Financial Services on the charts. Ravinder, coming to you. Indraprastha Gas, IGL is what you've taken. Tell us what's the reason.
Well, IGL is in focus where Citi has come out with a note on IGL, and they have maintained the buy rating, a hike target price to rupees 250 from 230. They say that brokerages see margin improvement driven by lower crude oil prices and believe that the company is on track to meet its margin guidance of over rupees 6 per SCM in the near term, and Citi also forecast an EBITDA per SCM range of rupees 6.5 to 7 over FY 26 to 28. So a bullish view from Citi, but stock is not reacting as positive and trading slightly in red, but recovers 1.5% from day's low.
Okay, Ravinder, thanks for that. Stock giving into the market pressure, 0.5% cut coming in. Gaurav, you've picked out Polycab, a decent earnings candidate. Tell us what the earnings fine print looks like.
Well, yes, when we look at Polycab, a little bit of good set of numbers is what we are seeing from the company, because when we look at revenue, that has increased almost by 25% on a year-on-year basis. When we talk about net profit, now that has gone up almost by 34% on a year-on-year basis. On the back of this, when we look at EBITDA margin, of course there was a EBITDA margin expansion of around 106 basis points. Now EBITDA margin stands at around 14.7%, and EBITDA also in absolute terms increased almost by 34%. On the other hand, when we talk about the company and the shareholders return, company has now recommended dividend of around 35 rupees per equity share. So that is again another news flow and a very positive news flow for the company's shareholders. And they have also approved some of the other factors. So let's talk about the amalgamation of Uniglobus Electrical and Electronic Private Limited. With Polycab India, they have also said that the wires and cable segment has now increased almost by 22% on a year-on-year basis. When we talk about fast-moving electric goods, that business segment has also grown almost by 33%, and EPC business has registered a growth of as high as 47%. So definitely a good set of numbers is what we saw from Polycab in Q4 FY25. Obviously, we will be watching out on how the commentary is coming to be from the management, but on the back of the good set of numbers, we are seeing a positive uptick in the stock price.
Okay, so that's the reason Polycab is in focus. Let's move on from that and talk about the next stock that's in focus, and that's Aircon International. That's in focus in today's trading session. It's a positive news flow coming in. The news regarding this company is on the back of an order win that Aircon International has seen, and they've announced that the company has secured a 187 crore order from Kerala State IT Infrastructure for the construction of a dedicated rural industrial park in Thiruvananthapuram. Now the project is structured as a work contract on an item rate basis and is to be completed within a period of 30 months. The scope of work includes infrastructure development and civil works for setting up the industrial park aimed at promoting rural industrialization in the region. Remember, last week as well, Aircon International was in focus because they had received a letter of acceptance from Northeastern Electric Power Corporation for an amount of roughly 458 crore rupees. So back-to-back order wins coming in for Aircon International. That stock is looking pretty okay right now. It's given into the market pressure. A 1.5% downtick is what we are seeing on that stock. Before we wrap it up, let's just talk about another stock that's in focus. You have Bank of Baroda numbers that have come out just in time. You have net profit that's come in at 5,048 crores is what we are gathering from agencies. That's the first take. The stock is lower by almost 3.2% right now. Let's see once we get more numbers what happens to the stock. In the meanwhile, let's talk about Tata Motors because the demerger is in focus for this stock. The shareholders are going to be voting today to approve the CV business spin-off, and appointed date of the merger under the scheme is of the demerger under the scheme is 1st of July this year, and effective date of the demerger is expected to be anywhere between October and December of this year. That stock is also under pressure, a 2.2% cut coming in on that stock. Remember, the demerger plan was announced earlier, and two separated listed companies will be taking place after this demerger, which is one will be the CV business and the other will be the PV business, that will include their PV, EV, JLR and their related investments in another entity. So basically that is what we are seeing when it comes to Tata Motors. But first cut on Bank of Baroda, what we are gathering from agencies is a net profit of 5,048 crores. That stock seems to be where it is. It's not recovered at all. Interest income has come in at 30,642 crores, which is up 3.6%. Net interest income is down 6.6%. Maybe that is something that is maintaining the pressure on the stock. Now even further, let's try Bank of Baroda and take a look at what that stock is up to. It's a 3.5% cut coming in on that stock. That's the first take, and we'll be bringing you more numbers as well on that one as and when we get them. But on that note, we're completely timed out on this edition of Market Fatafat. From everybody on the show that and the team that put the show together, as well as Akshay for joining us, thanks a lot. We'll wrap it up, and thank you so much for watching. Closing Trades is up next.